Morning children. In the last class we have seen that accounts from incomplete records, part 1. In that we saw the meaning of the record, features and how to find out result of a small trader or a business which uses incomplete records. And today we are going to learn about how we are going to prepare final accounts from the incomplete records. We know final accounts means trading, P&L account and balance sheet. The trading account shows the gross result of the business from which we get gross profit or gross loss made in a business, and the profit and loss account is to prepare to calculate net profit of the business. These two statements are also called as profit and loss statements, and balance sheet is prepared to find out financial position of the business. In this part we are going to learn how we prepare final accounts from the available records, because we know incomplete records maintain only cash and personal accounts. From these available records, how we are going to find out final accounts of the business. Let us see. For this we have to prepare some accounts from which we are going to find out the missing figures. What are they? Let us see. Details of cash sales and cash purchase, it is available in the cash account. That is, we maintain a cash book from which we can find out cash sales and cash purchase. Also the detail of the expenses made. Finding out credit sales. How you find out credit sales? Credit sales are made to the customers who will pay the money on a later date. They purchase the goods from us and they pay later on. Till they pay, they are called as debtors, or we are making a credit sales. These credit sales are prepared by preparing total debtors account and a bill receivable account. Let us come to the topic bill receivable little later. Now let us see how the credit sales are found out by preparing total debtors account and bills receivable account. We have to find out another one item, that is credit purchases. Credit purchases are those purchases made without paying money. We purchase the goods from the suppliers. If you pay cash, we record it in cash book or cash account. If you purchase without paying money, till we pay, they are called creditors. We need to pay them, and by preparing total creditors account and bills payable account, we can find out credit purchases. And then at the final step, we prepare the final accounts that comprises with the available data, that is cash sales, credit sales and cash purchase, credit purchases and other expenses which are recorded in the cash book are used, and then we prepare final accounts of the business. Let us find out how a cash book looks like. This we learned already in the plus one course, that is cash book. How does it look like? What are the things it records? Cash book is a record of all those transactions which involve paying out of money and receiving the money. Through what are the things? Let us say debit side of that account we show it as receipts, and credit side we tell it is payments. What are the things on the receipt side we record? That is opening cash balance, what is available during the starting of the accounting period. Sales account, that is cash sales made for money, by paying money. That is, we receive money and make a sale, that is cash sales. This debtors account is the amount collected from debtors, or you can say customers, those who took the goods from us on a earlier date. If they pay money, we put it on the receipt side as debtors account. Payment side, what are the things we pay for? That is purchase account, that is nothing but cash purchase. If it is recorded in cash book, it is called as cash purchase. Creditors account, that is payment made to creditors or those purchases we made earlier, they are paid now. General expenses, other nominal accounts, expenses like salary, electricity bill, stationery charges or various other expenses, we show it on the payment side, that is general expenses, wages, and this is the closing balance. At the end of the accounting period, we arrive at a balance, that is closing balance, which will be used to record as an asset in the balance sheet. This is how a cash book look like. Now coming to preparation of, that is to calculate credit sales, we need to prepare send a total debtors account and bill receivable account. What is a bill receivable account? Debtors account, we know debtors account are those in which customers need to pay the money. Bill receivable account is integrated with the total debtors account because till he pays he is called debtor, but if he signs a bill, if he accepts a bill, then it becomes a bill receivable for us. It's another way of getting the money or finance, that is bill receivable account. It is also equivalent to debtors account. Let us see what are the things it records. Bill receivable account, this is opening balance of bill receivable. This is bill receivable received during the year. During the year, if a customer accepts the bill and we prepare the bill and send him, get it accepted and we keep it. Sometimes for the financial needs, we discount this bill with the bank to get money. Such type of items here. Cash or bank account, that is bill receivables honored, that is paid, or during the due date, if a customer pays the money, then it is bill receivable honored. And then sundry debtors, bill receivable dishonored. Sometimes on a due date, if a customer who has accepted a bill, if he fails to pay the money, then it is called, it is dishonored. Again, if it is dishonored, it reduces the bill receivable account, hence we record it on the credit side of the bill receivable book. And this is the closing balance. At the end of the accounting period, whatever bill receivable balance is there, it will be shown on the asset side of the balance sheet. This is a typical debtor account, whereas the debtors who signed the bill will be reflected here. Let us see the debtors account. This is a format of sundry debtors or total debtors account of the business, whole business. The opening balance of the debtors on the debit side. Since bill receivable and debtors both are real accounts, they are having debit balance, opening balance. Sales account, that is credit sales made during the year, those sales made without making any money, that is credit sales. Bank account, checks dishonored, those checks which are sent to deposit it into the bank, and if the customer do not have sufficient balance, such type of checks, that is bank account checks dishonored. Bill receivables dishonored. Bill receivables, sometimes on a due date, if a customer who accepted the bill failed to pay the money or unable to pay the money, such bills are told to be dishonored bills. They are reflected here. On the credit side, which are reducing the debtors balance, cash received. Once you receive cash from a customer or debtor, then it reduces the debtors account, that is reflected on the credit side. Bank account, checks received. If he pays in the form of check, then it is reflected here. Discount allowed. Sometimes for making a large purchase, we offer a discount, that is reflected here. Discount allowed to the customers. Sales return. Sometimes the goods sent to him may not be as per the sample, or sometimes the package must have broken. Such type of returns, they are called sales returns. They also reduce the amount due from the debtors. Bad debts. Bad debts are those debts which are not recoverable. we are unable to find out the customer. Though he has taken the goods, failed to pay the money, and we are unable to recover, such type of things are called bad debts. They also reduce the debtors. Bill receivables, bills received. If a debtor who has taken the goods on credit, if he accepts a bill prepared by us, we send a bill, he accepts and he agrees to pay the money on a future date. Such type of bills, if it is accepted, then it is transferred to bill receivable, that is previous account. Here it is credited, there you will see it is bills, he has signed, it has come here. Then it is the balancing this account, we get closing balance of total debtors. This will be reflected at the debtors on the asset side of the balance sheet. This is debtors account, and preparing bill receivable account and debtors account should be simultaneous to arrive the credit sales made, that is credit sales. This is the balancing figure which by preparing this account, both the accounts, that is bill receivable and debtors, we are going to find out credit sales. Now coming to the next credit, to find out the total purchase made, we know from the cash book, that is cash purchase, and by preparing bills payable account and total creditors account, we are going to find out credit purchases. Now let us see about it. Total creditors account and bills payable account are used to find out credit purchases. Let us see how the bills payable account look like. Bills payable account is like a same bill receivable, it is just opposite to it. When we purchase the goods on credit from a supplier without paying money, if you pay money, it is reflected in the cash book, isn't it? Now if you do not pay, then it is becoming sundry creditors, the amount due to the supplier. And if we accept a bill manufactured prepared by the supplier, then it is called bills payable account. It is a real account and it's a liability, we need to pay to the supplier. Once you sign a bill, we need to prepare the amount to be paid on a particular date. So what are the net liability? We are finding out by preparing a bills payable account. That is opening balance. Since it is a liability, it has a credit balance. Balance brought down, that is opening balance. And cash or bank. Cash or bank, or when you pay the bills payable on a due date, if you pay cash, write cash. If you pay through check, then write bank account. That is bills payable paid during that year. Sundry creditors, bills payable dishonored. Sometimes if you don't pay, we don't pay, we did not have money, but it is now payable, and if you unable to pay on a particular date, then it is called a bills payable dishonored. Such type of accounts. And then closing balance of sundry creditors, sorry, bills payable at the end of the year. Bills payable balance at the end of the year is reflected 1, 2, 3 and the opening balance. If you balance, you will get sundry creditors, bills accepted during the year. Total bills accepted during the year is arrived here. This is the figure we need to find out. Now bills payable and sundry creditors both are to be prepared simultaneously. This is sundry creditors account. Like bills payable, it is also having a opening balance on the credit side of the ledger account. Opening balance. Then what are the things we have to find out? Let us see. If you pay the suppliers, creditors, then it is cash account. If you pay in cash, if you pay in the form of check, then it is bank account. In both the way, that is cash paid or paid through check, both are reflected on the debit side, which reduces the sundry creditors, amount due to the sundry creditors. Bills payable account, bill accepted. Bill accept, when you make a credit purchase, then it is total, that is sundry creditors account. When you accept a bill, this amount is transferred to bills payable account. That is bills payable, bill accepted during the year, which is correspondingly you will find in the column bill accepted. Now discount received. Discount received. When you make a bulk purchase, the supplier gives some discount which we need not to pay. Or you can say that is a discount allowed to us, which reduces the total amount due to the creditors. Discount received. Purchase return. Sometimes the goods sent by the supplier is not as per sample, or sometimes package broken. Such type of things are returned back, which is also reducing the total creditors. And this is the closing balance. With all this, now here, this is the opening balance. This is opening balance. Purchases, that is credit purchases made. What you are going to find out, this is the figure. Bank account, checks dishonored. Sometimes whatever the checks we give here, if it is dishonored because of material fault or not sufficient balance is maintained, such type of checks dishonored. Bills payable dishonored. Sometimes bills whatever we accepted, and if we are unable to meet the bill on a particular date, then it is called dishonored. Bills dishonored. Such type of known items are put this side and this side. Then we finally find out the credit purchases made. This is the ultimate result of combining the bills payable account with the total creditors account to arrive at total credit purchases. Understood? Now with the credit sales available, cash sales available, credit purchase available and cash purchases available, we find out total sales. Total sales is equal to cash sales and credit sales. Likewise, total purchases equal to cash purchases and plus credit purchases. This credit sales comes from the total debtors account. This credit purchases comes from the total creditors account. Understood? Now let us go how a final account is prepared. We learned the ways of preparing missing figures, that is with the help of cash book, bills receivable account and debtors account, and bills payable account and total creditors account. Now we are going to prepare final accounts. Final account comprises trading account, profit and loss account, or you can say profit and loss statements, and a balance sheet which indicates the financial position of the business. The trading account, opening stock, total purchases, what we found out from the balance of total creditors account, wages account from the cash book, total sales from the debtors account and bill receivable account, then closing stock. With that we prepare gross profit, or you can say gross result of the business. Just we compare sales and purchase, we arrive at a approximate profit, that is gross profit. And by preparing profit and loss account, we are going to find out net profit of the business, gross profit, operating and non-operating expenses. On the debit side, distribution expenses, financial expenses and other indirect expenses. We arrive at net profit. This net profit is added with the capital, which is the result of the business for that year, is added with the opening capital. That is, opening capital is found, how it is found out, as we learned in the previous class, with the help of opening assets and opening liabilities. That is, total opening assets minus opening liabilities, we get opening capital. By preparing statement of affairs on a opening date, less drawings. Drawings is found out from drawings are found out from the cash book, and add the net profit, which gives the adjusted closing capital, and closing bills payable from the bills payable account, closing creditors, that is final creditors of the business. On the asset side, we have all the other assets known: land, building, machinery, closing stock, bill receivable. This bill receivable is the balance at the end of the accounting period from the bill receivable account. Debtors account, that is closing balance of debtors available. Bank and cash balance, this is closing balance of bank and closing balance of cash, what is available with the business at the end of the accounting period. We prepare balance sheet. necessary adjustments are done for depreciation for machinery, bad debts on sundry debtors are adjusted and they are reflected in the profit and loss account as you learned in the previous class. Now to conclude the accounts prepared under incomplete books, let us recapitulate from the following. Now first, what you learned, prepare, what is incomplete records? Incomplete records. Under that, how profit is made? Profit, how it is calculated? C plus, that is closing capital plus drawing, reduce the additional capital and reduce the opening capital, we get profit. If it is plus profit, if it is in a negative number, then it is termed as loss. Again, now what we learned today, that is preparation of final accounts with the available figures, because incomplete is shortage of some accounts. Their nominal accounts are not recorded, real accounts are not fully recorded. With such a situation, we need to prepare final accounts. How it is prepared? That is obtaining cash sales and cash purchase from cash book, finding out credit sales with the preparation of total debtors account, bill receivable account, finding out credit purchases with the total creditors account and bills payable account, and then we prepare final accounts. And as you know, total sales is nothing but adding the cash sales from the cash book and credit sales from the debtors account, finding out total purchases, cash purchases from cash book and credit purchases from total creditors account, and preparing final, that is very simple, that is trading P&L account, balance sheet with a small adjustment towards depreciation and bad debts. We need to complete the final accounts. Now we come to the end of the chapter. If you look into your book, sufficient illustrations are given to learn it practically, and self-evaluatory questions are at the rear side of the book in the exercise part. Now let us work it out one by one and verify the answers given underneath. Thank you very much, children. Let us complete the chapter. Thank you.